What's up guys, Louis here, hope you are doing great. Today I decided to make a video about a topic that is very important and not a lot of people, especially beginner investors, is aware of this. What we will be talking about is something that can set you up for success if done correctly, or it can ultimately set you up for failure. So if you are someone that is just starting in property, or maybe you are already invested in property, follow along to see if this is something that you got right from the beginning. I was lucky enough to have some really great mentors to guide me in the right direction. So personally, I did not make this mistake because it would have cost me a lot of money. This is the main reason why I am sharing this with you guys, because not everyone has a mentor or someone that they can look up to, or basically just send a WhatsApp to ask a few questions that they are not sure of. So you might ask yourself, what is this mistake that is so hyped up in this video? And it is buying property in your own name. When I speak to people that want to buy property, the first thing I ask them is if they have their structures in order. Most of the time people don't really understand what this means, and then it gives me my answer I was looking for. Buying property in your own name might seem like a good idea at first. Usually it's recommended by your financial planner or someone that has bought their property in their own name. In this video, I'm going to explain to you why it is the worst decision that you can make. And if you've bought a property in your own name, you don't have to feel bad, because this is ultimately the only way we learn. Not everyone has the correct knowledge when starting out, and it's something that we learn over time. So one of the reasons why I do not buy property in my own name is because I don't want to own 1 or 2 or 3 properties. And the only way that you can buy 10 or 20 or 30 properties is by doing it in a separate entity. Buying property is like a business, so we need to treat it like a business as well. That means we need to run it in a separate entity, we need separate financial statements, and ultimately this will show the banks that we are a serious business. If you are buying property in your own name, imagine you have a 9-to-5 job. You get your pay slip every month, all of your income goes into your one account, and then suddenly you need to run your property business from that account as well. Just imagine having rates and taxes, levies going off, water and electricity bills. There's so much admin that goes into running a rental property business, and it's really kind of just a shit show when you do it through your check or savings account. Besides the administration issues, there's also protection issues. And this means that you have no protection against creditors. If someone should come after your assets, unfortunately it is attached to your own name. When someone looks at my personal belongings, I really do not own much. There's a saying of Rich Dad Poor Dad where he says, own nothing but control everything. And this is kind of the approach that you need to have when buying property in a different entity. When people buy property in their own name, usually they only want to buy one property, and that really is okay if your goal is only to have one property. Hopefully the people that is watching this channel want to own more than one property. If that is true, just give me a thumbs up in the comments so I know that I'm actually making the right videos. But when you buy a property in your own name, it's okay to only have that one property, because that will probably be your dream home. Another reason why people buy property in their own name is because of the tax rebate that you can get. Let's say, for example, you as an individual bought a property of 1.5 million rand. You get a tax rebate up to 2 million rand, which means if you sell your property, you won't pay capital gains tax on your gains up until 2 million rand. So if we bought the property for 1.5 million rand and later on, let's say 10 years down the road, we want to sell the property for 1.9 million, we will not pay capital gains tax on that gain at all. Unfortunately, if your gain is above 2 million rand, then you will pay capital gains tax on it. So having this one tax advantage of buying property in your own name is definitely not enough to actually buy it in your own name. A lot of people that own property in their own name will probably hate on me for saying this, but you are basically setting yourself up for failure because you won't be able to expand your property portfolio, you won't be able to protect your assets from creditors, and when you die, your property will form part of your estate, meaning you will be taxed again. Living is expensive, but dying is even more expensive. If you guys want me to make a video specifically about different entities, feel free to comment down below where we can talk about property in your own name, owning property in a trust, and owning property in a closed corporation. These are basically the three options that you have, and personally the structure that I follow is buying property within a trust. Normally you can buy a property in a closed corporation as well, but the preferable method would be to have a trust that owns shares in a company and then the company purchases the property. This is the ultimate ring fencing strategy, and it means that you are really protected from creditors. There's a lot of advantages, like tax advantages, when you buy within a trust. There's a misconception when it comes to being taxed within a trust, because your average person will see the tax bracket, which is 45% for trust, and they will ultimately assume that this is the amount that you will be taxed on your profit, and this is simply not the case. Because we are property investors, we are smart, and we have successful and professional people in our teams that know a lot about tax and trust and different entities, and we need to use them and leverage them to make our money work harder for us. I personally use a company that is property investors themselves, so they really know their way around the property and tax laws. If you own a property in your own name, you might say, okay, but why don't I just move it to a different entity? And you can definitely do that, although you should get a professional to help you with that. It's going to cost you your initial transfer amount again. You know, when you buy a property, you need to pay transfer and registration cost, usually out of pocket. That is something that you will pay again when transferring to a different entity. It is seen as a new property transaction, so those costs are unavoidable, unfortunately. But the purpose of this video is to show you that when you buy property in your own name, you will run out of affordability eventually. This is when we are talking about traditional financed loans, and if you bought a property in your own name and you were lucky enough to buy a second property, eventually you will run out of affordability. We need to understand the way the bank looks at our finances, and ultimately the bank really just needs to protect themselves and they want some security. So let's say you were able to buy 1 or 2 or even 3 properties in your own name. You will never be able to buy 10 or 20 properties in your own name because you will run out of affordability. This means that the bank won't be lending you any more money because you are too risky for them to lend to. This is where the advantage comes in when buying property in different type of structures. Hopefully this video will help you to think about your structures before buying property. I always feel that the more I know, the more I realize that I don't know anything, and without the right knowledge you will not be able to avoid these mistakes, and it will cost you a lot of money. Not only money, but it will cause a lot of headaches as well. With that said, guys, thank you so much for watching. I really do appreciate your time. If you made it up until the end of this video, thank you so much for your support, and I really do hope I see you in the next video.